The Sherman County Board of Commissioners come to order, please. This is a budget hearing, revenue neutral hearing. We open it up for questions,
Comments?
Clarifications?
all the above.
So just, unencumbered cash. That's the amount of, on the departments that are tax levied, that's the amount that's accumulated, could have accumulated over the years between what was taxed and what was brought in and what was not spent. Is that correct?
Yes.
Yes, okay. And then, I didn't work here forever and ever, but as long as I did, what is the tort liability fund? What is that used for?
The what?
Tort liability. I looked up the definition, but I don't know that is what the fund, what is that fund used for?
It's part of our insurance policy, what we pay to K-Camp.
Okay, so, all right. So I did receive a copy of the budget from the clerk's office, and I just had some observations that I would like to state. I don't know, I know if you've been following the news all across the state, people have been coming to the budget hearings, they're very upset, and I'm just gonna give you an example in Shawnee County. 10%, their budget hearing was 4.5 hours because they raised it 10%. I do know there's supposed to be some new legislation in the process that, because the taxes are raising it, and then part of it is what, when an appraiser comes in or when somebody asks you guys, that's exactly right. Valuations have gone up. My gosh, they tripled in the last 10 years probably. And the state factors have gone up. My house, for example, is probably worth 2-3 times as much valuation wise. The taxes are 2 or 3 times what it was when I bought it too. So like the one news article I read, that's all fine and dandy if I plan to sell my house, but I don't plan to sell my house. So I fear that our taxes are getting to the point where I know a lot of the elderly in our community are really struggling to pay their taxes. It's become such a huge portion of, most of them don't live in substantial houses, but there's some that quite honestly probably need to downsize, but that's their business, not mine. But anyway, so I felt that I wanted to look at the budget and kind of just dig into it a little bit. One thing that really caught my attention was, I know when I was county treasurer, I had to take, and I talked to you guys about this, I can't remember if it was $1.25 or $1.5 million CD, because we had, quote, excess funds above and beyond what I like to keep in the accounts and stuff. When I looked at this, the expected unencumbered cash for just the departments with tax levies that's going to be carried over from 2003 to 2004 is $3.1 million. I think that's excessive. Talked to several other counties. If they carried $500,000 over, that's like, in my opinion, and you tell me if I'm wrong, or maybe there's a different thought process, that's like me walking into a store and saying, here's $500. I probably won't spend it this year, but I will spend it in the next 5 years, so you keep it. So in other words, we're taxing more, and you have to tax, what I was saying. When you do your budget, that's a estimated amount that you're going to spend, and there's always going to be some carryover. But to carry over $3.1 million is a lot. And I know that factors into then when you calculate the new taxes, if the budget's, pull some figures out, $1,000, there was $500 carried over, you reduce the quote taxable amount down to $500. But still, with that said, you're using the county's money. And some of this could have been for years, because I did notice that your unencumbered cash has been going down over the last few years. But I question whether the budgets are being done with the fact in mind that maybe we could pare some of those budgets a little bit. Some of them can't be, some of them need to be greatly increased on road and bridge. I mean, I'm just gonna use that. What a grader costs today, it's what, 3 times what it cost or even during COVID, because they could get that tax money and stuff. So there's some budgets that, I mean, we can't just run the county on a Band-Aid, I understand that, but if a department is continually, say, there's $500 carryover, 1,000 or two, or even $1 million and some, maybe that should be considered when you're looking at the budget. Do you need all that in there? Is there some places that can be pared without cutting employee benefits, without, cutting out necessary expenses? And I think that's something that maybe has not been looked at. When I look through here, the estimated 2004 expenses are 13 million. I'm only going to talk about the taxable funds, because when you get down into the ones without tax, when you're talking about 6.1 million carryover, but that's money that comes in for transient tax that you don't spend. You don't usually plan to spend all that. That's in other things, the 1% sales tax, things like that. The ones without levies are monies that come in from the state, have revenue that way. You don't usually plan on spending those. So I'm just gonna talk about the ones with tax, that are tax collected money, and some of those have other other revenues too. The overall increase is 18% of the budget of that. Pretty high, I think, when you factor that in with the standard cost of living right now. Pretty high. We have a few that are 108% tort. That's the reason I asked what tort was, is that's 150% increase. Elections, 93%. Soldiers Park's 108% increase. Most of them are 19% or below. The majority of them are. Some of them had no change, but overall that leaves an 18% increase. I think that's pretty substantial in this time when people are in this community are struggling. I think that's a lot of excess money. I mean, some of those departments just, I mean, maybe there's a way that some of those could scale down a little bit. I'm gonna only assume health. They're probably hiring more people or buying vehicles, something that's substantial. Election, 47,000 of that is for salaries, personnel services. If you do a backwards figure, I'm not sure where you would pay that much salary out of election. You take $25 an hour, 16 hours, 10 people, 4 elections, that's only $16,000 of that $47,000. And I do know we've got election year coming up, so it will take more, because there is gonna be more elections and more help doing that, but so like, where's the rest of that going? And I pulled through several of the others and kind of the same type of thing, and I think as a taxpayer, I wish there was more people here this morning, but I know it's advertised in the paper, but the agenda doesn't even say that you're doing the taxes, the budget hearing this morning. How many people really know how to read the paper anymore? I wish the community would get more involved. I hear about it all the time, but yet they don't come to the meeting, and that's shame on them for that. But I just felt as a taxpayer, I felt like those figures should be known and made public, and could be very justifiable reasons for them. But just going through the picket nose out and felt that was awful excessive. I hope I know that doesn't mean that my house taxes are going up 18%, because there's a lot of other factors that go back into that. But I still think the budget is, and I realize there's other budgets, there's city budget, there's all the other taxing districts that are in the same boat. I don't know what their percent of increases are, but the county is a large share of our taxes. So I think budgets are probably, we can't control what the state says our rates are. We can't control what our appraised values are, assessed values are. Those things we really can't control. We can control the budget. So, thank you.
Thank you.
Anyone else?
I'm not nearly as eloquent or knowledgeable, but I would agree completely. You just look at the numbers on this sheet and the increases over the past 2 years, just is huge to me. And the ones that jumped out was the election board, and say I would question that the health and healthcare services, and I don't know if it's educational. I don't know what is the BOCC debt service.
That's nursing home, the new home.
So that's got a huge jump on it.
Sure.
And waste disposal and tourism and convention. And I guess, I don't know what all goes into that one, but that one jumps out at me that, I guess I was very disappointed when the 1 cent road tax come up and the city didn't support that to begin with, because they weren't getting anything out of the first one. And if the city doesn't care about keeping 24 up and running, it's pretty hard to care much about the businesses in Goodland. So, but I know costs are going up for everybody, but I wish you didn't have to see the county dig into us too. So, thank you.
Anyone else?
I can't believe how much my taxes increased from last year to this year on my home. It's about $1,972.35. Is everybody else seeing the same thing, or am I just out in the field by myself? Is this happening to everybody? Nobody knows? I mean, I've talked to the appraiser and I didn't really get no answers or anything. And I'm just trying to figure out why this is happening. Is it because of the budget that they propose now made it go up that high? Or is it the land values? Because there's no improvements in my area. I mean, it is nothing going on there. Why did my taxes go up so high? It's, and the appraised value, I was amazed at that. It went up from 120,000 to 150,000 in 1 year's time. Why is that? I'm not getting any answers.
Well, the appraised value, we have no control over that. That comes from the state saying that, but setting the value. But when houses are selling for 125 to 150% over appraised value, that starts affecting the value of your home. And that, like Mrs. Hall said, she doesn't want to sell her house, but other people have sold theirs and they've got an increased amount of money. And so the valuation is passed down to everyone from that. So
So
even though,
It used to be kind of you knew your taxes were gonna go up if you lived in a block that the houses behind you and beside you and kind of within an area went up. But now there's so many houses that have been sold in the community that it affects everybody, whether there's any increase in your area or not, your valuation gone up, is gonna go up because of the whole community and the whole state.
yes.
You know, it's not just here that the valuations are going up, it's clear across the state. So, that said, if you go to Estes Park and buy a $3 million home, you only have to pay $3,000 in taxes, and I'm like, what? I don't know how they do that.
Yeah.
It's all the Estes.
Well,
But, yeah, it's not just that area anymore.
you know, it's definitely putting a squeeze on people that are elderly, you know, like me, and so I just would like to see something done about this. I know I could go through and put a protest in, I guess, on the taxes, but it won't do no good this year because I've already got the valuation. I have to wait till next year, the way I understand. Then there's the Homestead Act, I guess that you can apply for like $700, but you don't get that, can't do that till December. So I'm just out there searching for some help, I guess, or I don't need the money, but I mean, there's got to be other people besides me around here that are really see an increase in that, and so that's my thought.
It's a good reason there's so many rentals in town, because people are.
Pardon?
It's a good reason there's so many rentals in town, because a lot of people cannot afford to buy houses anymore,
Yeah,
so they have to pay rent,
that's that.
unfortunately.
Any other comments? Questions?
If not, I will make a motion to approve resolution 23-9 for the County Commission of Sherman County to levy a property tax to exceed the revenue neutral rate of 72.276.
I'll second that
Oh,
motion.
hold on, we need a roll call vote.
Yes.
Swagger, not present. Blake,
Yes.
Ever.
Yes. And moved in second, the favor was 4. Motion is passed.
And you'll open up the budget hearing.
Open up the budget hearing now. Any questions or any other questions or comments on it?
The notice says that there'll be detailed, you can get a detailed budget here at the meeting. Is this the detailed budget? Can I have that without paying for it? That's.
motion?
There are no comments. I will make a motion to hereby certify and adopt the 2024 budget.
I'll second that motion. Does this need to be roll call also? All in favor, say aye.
Aye.
Aye. Opposed, same sign. Motion is passed. Anything else?
Aaron, for the 2022 audit.
Aaron?
Thank you, guys.
Thank you.
Thank you.
Okay, we'll start with the municipal solid waste agreed upon procedures report real quick.
Can't wait.
So as required by KDHE, when you own and operate a municipal solid waste, that you do have to meet some financial assurance tests. So these agreed upon procedures are to determine if Sherman County is in compliance with those various financial assurance ratios and so forth for the year ended December 31st, 2022. Based off our procedures, you guys did meet all the requirements as specified by KDHE as far as coming with municipal solid waste, meeting the ratios, things of that nature, okay? Really not much other to go over than this. I will need at least 3 signed copies, 2 for me and 1 for you guys. And if you want any additional signed copies for you, that's fine. But I at least need 2, 1 for my records and then 1 to send off to KDHE.
Okay, just a question for you on, first, Chief Financial Officer letter. It has post-closure of 540, or closure of 542, and then post-closure of 618. That, if we closed it, it would cost us that, but
Yes, and then the cost of maintaining it after closure through however long, the things that
Okay.
you'll have to do for
That's-
environmental purposes.
Yeah.
That's what the additional 618 is for, yeah. Just set that one in 2 for me, and I'll be there.
signature line,
Mhm.
just one signature line.
Yeah, and then name and your title, yep. Thank you. Okay, now we'll jump into the 12/31/2022 audit for Sherman County. At the beginning, there's a loose letter. This is communication with those charged with governance. If anything came to our attention during the audit that would not go in the audit report itself, that we merited your attention in writing, it would go in this letter. We're not aware of anything, so it's just kind of the boilerplate letter that's required by standards. Starting on the back of page 2 are the audit adjustments that we went through as part of the audit that we're required to go over with you as part of the standards. First journal entry is just a timing difference with one of your guys' bonds. So by law, you have to send the payment to the state of Kansas 20 days prior to its maturity date. Your maturity date is like 1/1. So to send it, we have to have it to them in December. So to make sure it matches up with what the state, it's just like a timing difference between when you guys are showing the payments on the books and when we're showing it on the audit report to match up with the state of Kansas, okay? The second journal entry was to reverse a payment on a 12/31/21 unrecorded encumbrance. So again, the check was written in 2022, but the expenditure was charged against the 2021 budget because that's when the contract, that the service was provided, okay?
Right.
Journal entry number 4 was just a slight adjustment to the payroll liabilities and the payroll in the employee benefit fund, again, somebody may have been on a plan that dropped it, so there was just a slight difference between the invoice that was paid and what was accrued. So again, just a slight cleanup on that. 12/31/22 was to record a unrecorded encumbrance for 2022. Journal entry number 8 was to close out the auto administration to the general fund that's required by statutes. Journal entry number 9 is kind of the one we have every year to close out those solid waste fees that are accumulating in that fund 508, 509 that then we do. It's not really part of the normal appropriation, so this is just to close it out to the solid waste fund. Journal entry number 10 was to reclassify some expenditures to general fund due to some budget restrictions. We were a little bit over budget in those funds, so again, just reclassified those to the general fund. Journal entry number 11 was to, in the healthcare, in the project fund for the nursing home, after all said and done, we were at a $72 negative cash where we had $72 more. So again, just move those to the healthcare services. Journal entry number 10 was to reclass some health insurance expenses to general fund for year-end budget planning purposes. Journal entry number 13 was to record all the year-end transfers that, we wait till we come out to the audit so we can visit with Ashley and the various department heads and say, okay, here's what you've got as far as cash, here's what's remaining budget, here's what we anticipate to carry over into the next year before we determine those final year-end transfers for future expenditures. And then journal entry number 14 was just to finally clean up that Spark money to get that moved to reimburse the general fund for costs that were charged to general. Okay, any questions on those?
Are we getting to the point of cash on hand when we need to start using some of that?
Well, again, it just kind of depends. I mean, if you got stuff that you need to do and we budget for it, then I would say do it. But, again, a lot of that money that we're moving into capital improvement, whether it be just the normal capital improvement equipment reserve or the capital improvement Highway 24, is money that we're setting aside for future expenditures. So hopefully that we have the monies there to finance it versus having to do geo bonds or something like that to pay for it.
Right.
But again, I mean, if I always look at it like, well, just because you have the money to spend it doesn't mean you necessarily need to spend it unless we budgeted for it and we have the need for it. Okay. All right, our report itself, so starting on page 1 is our opinion for the financial statement for year ended December 31st, 2022. They kind of revamped this. They moved the opinion right off to the front versus towards the end. So like you guys have noticed in years past, we first have to have that adverse opinion on U.S. generally accepted accounting principles. That's basically to let them know, the users of these financial statements, that the financial statements are not prepared in conformity with generally accepted accounting principles. But the state of Kansas does allow municipalities to use a regulatory basis accounting, which is that GAAP waiver that you guys pass every year to waive GAAP and adhere to that regulatory basis accounting. But that's just to let the users know, hey, these financial statements are not prepared in conformity with GAAP. And if it was, there would probably be material differences between GAAP and the regulatory basis accounting that you guys elect to use. But then it goes to, on that regulatory basis accounting, the financial statements are fairly stated in all respects in accordance with the regulatory based accounting of the state of Kansas. Okay?
Yep.
All right, page 4 through 7, this is the basic financial statement. So again, this is going to give you beginning unencumbered cash, year-to-date receipts, year-to-date expenditures, ending unencumbered cash balance by fund, and then encumbrances and accounts payables, and then your ending cash balance. So again, like April was talking about with unencumbered cash is all revenues that you brought in, plus all expenditures, whether they've been paid or we've just entered into the contract. That gets us to our unencumbered cash. And then cash balance would be that plus the things that we have not paid for to get to our cash balance. So basically, one of the two main things of regulatory basis accounting is the cash basis law. that states that all funds must end the year with either a zero or positive cash balance unless it meets one of the exceptions. And those basically would be dealing with like federal or state grants where you have to spend the money first, then you can request the reimbursement from the state or the federal government. So if you're not negative by more than what you've got available to draw down, it would not be a cash violation. But looking at your ending unencumbered cash balance, all your funds are either zero or positive. So no cash violations for the year ended December 31st, 2022. And then if you cover the 6 and 7, the state, you guys have elected to include the Sherman County, Kansas Public Building Commission as part of your audit as a related municipal entity. You could either do that or have them have their own audit. Since you guys are maintaining the stuff on your books, it was just easier to just elect to include them with yours to meet their audit requirement as well. So that's that at the bottom. So we've got our total county funds, and then we've got a related municipal entity. And then down below there, with our total cash is where it's at between our various. So we've got our cash on hand. So there's always a little bit of cash kept on hand at the treasurer's office in the district court. That $464,000 on hand with the fiscal agent, that's the money that you sent on your bond payment in December that they're showing as cash on hand that they're going to apply to the payment in January of 23. Okay?
Yes.
And then the amounts in your checking accounts, your savings accounts, and your certificates of deposits for a total of a little over $26 million. And then we back off the amounts in the agency funds per Schedule 3, which we'll go over here in a little bit. So those are technically monies that are in your possession, but may not necessarily belong to the county until certain things are met. All right?
Yep.
Okay, page 8 are the notes of the financial statement. There's really nothing new on these, so we're just going to look at a couple of them. Page 10, note 3, compliance with Kansas statutes. So if there was any statutory violations that came to our attention during the audit, this is where we would disclose those, but we were not aware of any. Page 12 and 13, this is all the long-term debt issued in Sherman County or the Sherman County Public Building Commission. So we do have the Series 2012 refunding bonds, which those should be paid off this year, it looks like, 2023, so those will be paid off. Then we'll just be down to the Public Building Commission bonds and then the landfill compactor lease that we entered into in 2022. So the top half shows you the current year activity. What we started off the year is outstanding principal payments, interest payments, and then principal balance at the end of the year. And then down below are the principal and interest requirements for the next 5 years, and then 5-year increments after that through the date of maturity. Okay. The only other note that I like to point out is on page 15, note 8. So this is our CAPERS plan. It was either 2 or 3 years ago under GASB 68, we had to start disclosing your guys' share of the net pension liability at CAPERS. So every year they have an audit done that shows what their total net pension liability, and basically that's the amount of assets they have on hand that if they had to make required payments on their defined benefit pension plan, that's how much they would be short, basically. So then they break that net pension liability between the various local subgroups. So they put all the school districts together, they put all the cities and counties together, and then they allocate that net pension liability between each of those entities. So as of December 31st, 2022, your guys' share of that net pension liability was a little over $3.4 million. Now, again, that's not money that you have to have earmarked on hand for that. How they make up for that is you guys withhold some of that from the employee, and then the employer pays a share of that. And that actuarial rate that they use, it was 8.9% for 2022. I think it's 8.61% for 2023. So each year they adjust that rate to kind of make up for that net pension liability, but they're only allowed to go up so much by state law. So again, I just didn't want you to see it that and think, oh man, we have to have $3.4 million set aside for that. No, you do not. It's made up through those employer contributions. So it gets spread out throughout the years, okay?
Yep.
All right, starting on page 17 are the regulatory required supplementary information. They're not part of the basic financial statement, but are required to be presented under KMAG. So like I mentioned, cash basis is one of the main caveats of the regulatory basis accounting. The other is the budget law. So again, you guys do adopt that budget that shows what you're going to limit your spending to and all the funds that are required to be budgeted. and then comparing it to the expenditures charged for the year. So when looking at the variance over under, what we'd like to see is things either in parentheses or zero, meaning we came in our adopted budget. Okay. All right, starting on page 19 are the individual fund financial statements. I don't spend a lot of time on these. We're going to look at some graphs. We may come back to these for reference or so forth, but a lot of this is information that you guys have been going throughout the year, things of that nature. So, but just kind of give you an example, this just gives you more detailed of revenues by fund with comparison to the prior year, and then also comparison to the budget. As you can see there, just for example, in general fund, our total receipts decreased about $185,000 compared to the year before. Again, a lot of that was with the ambulance receipts, things of that nature. Again, the ambulance receipts are going to kind of vary from year to year, just depending on how many runs and stuff that they make and things of that nature. Okay. And then starting on page 20 are the various expenditures by departments. And then on page 22 shows you how much either receipts were over or under expenditures, what we started off the year as beginning unencumbered cash, and then what we ended the year as unencumbered cash. So for 2022, general fund decreased a little over $21,000. We spent more than we brought in by $21,000 again. Not terrible, but so you're going to have that for each fund. So again, if you're looking through these, going through these individual funds later, if something jumps out at you, if you have questions on, just let me know. Okay, but all right. So now we're going to move forward to page 76. Yeah. Well, there's a lot of funds, and I didn't think you'd want to go through each one of them in detail if we didn't have to. So these are the agency funds. So these are funds that are technically in the county's possession, but do not belong to the county necessarily. So like, for example, with the current tax of $10 million, some of that will be county's money at the January 20th distribution. Others will go out to the various cities, townships, school districts, things of that nature, water districts. So that's all those distributive funds. So those are monies that sit there, and then they're distributed by the treasurer's office at the various distribution date times set by the state. And then down below are the subdivision trust funds. So some of that money goes down into the subdivision trust funds, and then you guys cut a check and issue to them at the various distribution due dates.
Yep.
Okay. And then those other agency funds, so those are the funds that we do. Some of our departments, like the court trustee, the district court, the law library, they do have their individual bank statements that they're required to have by state laws. So that's what's sitting in those. All right. Okay, starting on page 78 are just some graphs that we like to throw at the end just to kind of give you some trend analysis to see how this year compares to the previous 4 audited years. So the first one shows you what our unencumbered cash balances have been doing by all funds, and then just the general fund, because again, like the general fund has the most flexibility. But also you don't want to carry a lot of cash in your general fund, otherwise, like this time of year with the budget, people come in and say, are we taxing more than we need to be? But again, that comes up to you guys as commissioners and with the county clerk's office. What is a healthy cash reserve to have so that we can meet the obligations as they come in and not have to do additional finance leases or general obligation bonds, things of that nature.
So it looks to me like for the last 3 years, from 20, 21, and 22, in the general fund, our cash reserve is pretty
even. Gone up just a little bit, but it stayed pretty even. There was no significant increases, decreases, things of that nature again. So that's good from a standpoint of you guys do have some flexibility on being able to do projects as they come up. So and then with all the county funds, again, a lot of that increase is going to be in that sales tax, road, the 1%, things of that nature. Again, those can only be used for specified purposes. So, all right.
Yep.
Page 79, 80, and 81 through 82, what we throw these graphs in there. So the first column is what our unencumbered cash was as of 12/31/22 and what our expenditures were for. So assuming if expenditures stay roughly the same for 2023, how much of our expenditures are being funded by our cash carryover and how much would be funded by new revenue. Okay, so again, this is all looking at cash reserves, things of that nature. I always kind of like to break it down in 2 months. So we spent about just a shade under $4 million in our general fund for all our various departments, things of that nature. And our cash carryover is about 1.7 million. So that would probably be roughly about 3 to 4 months reserves, where we could cover expenditures in our general fund for about 3-4 months without having to bring in any additional revenues. So again, because we do have to worry about that, because we get that big tax contribution in January, and then we don't get that next one till June. So we got to have that to cover those expenditures, because again, no department is going to be self-sufficient. No department is going to bring in fees enough to cover what it costs to have that department. There's always going to have to be supplemental income, whether it's tax dollars, sales tax, things of that nature to cover that. So that's kind of what those reserves are for. They're also is for cash flow needs. Okay. Road and bridge, you're probably looking about the same 3 to 4 month carryover. Health department, again, they're always going to have some cash carryover because they are on a state fiscal year. So they're going from July 1st through June 30th. So December 30th, they will always have some grant dollars that they have not quite spent, things of that nature. Noxious weed, basically, what we carry over is what they usually spend the next
Kids
year.
just sees it.
Yeah. Employee benefits is another one that you got to have some healthy cash reserves in, because you just never know when the health insurance companies are going to come in with a rate increase. And so you got to have that to cover that until your next budget year, in case you need to levy taxes to cover that. So it's just one that you got to have some cash reserves in for stuff like that. Hospital maintenance, appraiser, recreation, a lot of those are just kind of flow through. We levy the money, it kind of goes through or covers the cost of that. Soldiers Park, direct election, those type of things, just kind of tort liability, same thing. Tourism and convention, again, that's kind of one of those ones that, again, we get the money in, we just don't spend. So we are giving them the authority to spend it as a legal max budget, but they're not going to spend it all. Okay. Historical societies, another one that's just kind of a pass through. Your special alcohol, so again, that's money that you guys get from the liquor tax. So like if you got any businesses within the county that caters and does things of that nature, they do have to pay in this liquor tax, and they send it back to you. So much of it goes in the general fund, so much of it goes into special alcohol, and so much of it goes into special parks and rec. Now the special alcohol is supposed to be used for programs for drug awareness, things of that nature. There's just not a lot of that stuff being put on right now, but again, that might be something you visit with the sheriff's department. There's anything we can be doing more of from the drug awareness that we can use this money for.
Isn't that what we do? Isn't that some of those groups?
We've never picked a group to give the money to.
Okay.
We used to do ADAC over in Thomas County, and then they lost certification or something happened, and then there have been a
Okay.
couple other groups that have come. We've just never picked one.
Okay. Now, do you just have to pick one?
No.
I mean, you could evenly distribute it
Yeah,
amongst whoever's doing it.
Yeah, but basically that's what that money's got to be used for. With the money that goes in special parks and rec, that just gets used for maintaining of park and recreational activities within the county.
Okay.
I don't know if you guys have a county lake or anything like that.
Smoky Gardens.
So-
Yep.
Okay, funds like service to the elderly, home maintenance, conservation district, we levy it and then we just pass it right on through to them guys.
Okay.
Same thing with the cemetery, library, the healthcare services, again, that's money that, we're not going to spend everything we bring in. So it's going to have some cash carryover. Same with the sales tax for road project and the solid waste. Okay. Page 83, this is general fund revenues versus expenditures. So as you can see, for the most part, the last 5 years, revenues have exceeded expenditures just slightly over the last 5 years. So again, you guys are bringing in the revenues to cover the costs, and not a lot of extra. A lot of that stuff, that cash carryover has been, through other things throughout the years. But again, you are just kind of, I think, levying what you need to cover the current cost of what your general fund departments are. Okay, general fund, this is our revenues broke out by taxes, license and fees, redemption, interest rate, reimbursements and miscellaneous and transfers. Again, taxes have been going up. I think a lot of that's more dealing with the appraised value's been going up the last several years. And again, it's hard from a county standpoint because again, you never know what that appraised value is going to do. You guys like to keep that mill rate the same. So you keep the mill rate the same, the valuation goes up, you take those additional dollars. That way, if some reason, because again, this market's going to correct itself, and I do anticipate that valuation to come back down. You guys as a county should be able to keep your mill rates roughly the same for a year or two without having to go up if the valuation keeps going the other way, okay? License and fees, that's just going to be the fees that your various departments bring in, like the ambulance, county health, things of that nature. Interest and rent, reimbursements and miscellaneous, and then what we transfer out to various funds like equipment reserve and capital improvement for future cost. And then the last several are just our expenditures by the departments in the general fund and some of our special purpose funds, just kind of see if departments, house departments, and the spendings have gone. Obviously, your big ones are going to be your sheriff, your central dispatch, ambulance, things of those nature. Those are going to be your big departments because they provide the vital services that the county needs. Okay, and then we give like page 88 is just some of your major, so your road and bridge, health, noxious weed, employee benefits, hospital maintenance, appraiser, solid waste. Again, road and bridge is just going to kind of depend on what bridge projects come up, street, road or grade purchases, employee benefits is just going to vary depending on what your health insurance costs do, things of that nature. All right? Questions, comments? I know that's a lot of information, so I know you're going to look through this in detail later. If you have any questions, I'm sure Ashley knows the answer, but if not, she'll reach out to me and I will get those answered. So.
Okay.
So I will get this filed with KDHE in the state of Kansas, and then they'll send me the instructions for the filing fee. It did go up a little bit this year, that filing fee from $175 to $300. So
A little bit. Yeah.
Wow.
well,
Fine.
yeah. I mean, I guess yes, it doubled. I don't know what you consider. So I don't know why they just did so.
Because they can do it.
Because they can do it, right? Just like you guys got to go through these R&R and budget hearing process when the state sets their budget, they just set up what they want.
Yes.
Right.
I asked the state legislator once, I was like, what if the federal government came down and told you guys how? Well, they can't do that. They can't dictate how we spend our budget. Well, that's kind of what you're doing to the
That's what
counties
you do,
and
yeah.
cities and schools. Well, that's different. No, it's really not.
Yeah, exactly.
Well, anyway, I appreciate letting me be here this
Thank you.
morning to go over
Yep,
this
thank
stuff. So, again, if any questions, let me know. Otherwise, I'll turn it back over to you guys. Thank you.
Thank you.
We got stuff signed here, so that's it. I entertain a motion for adjournment.
So move.
I'll second. It's been moved and seconded. All in favor say aye.
Aye.
Aye. Pose same sign. Meeting's adjourned.